Monday. What's up, everybody? Monday morning. Welcome to today's edition, Daily Market Commentary. I'm your host, Chuck Fulkerson. Everybody had a phenomenal weekend as we are rolling into the start of a new week. And we are seeing what the markets are doing and what they're going to give us. Let's go ahead and start a little bit with a big picture of the S&P, starting with the daily chart. And the reason I'm starting with the daily chart is because we had we've got an interesting picture so far on Monday morning with some overnight rallies, and then we have kind of sold back off. Now, one of the things that I do take a particular look at is volume. And the reason I'm looking at volume is because note that on our rally up, we on the daily charts, we saw lower volume on the rallies up. Now, not always going to be a major concern, but a little bit of a concern in the fact that our rally up happened with that bit of lower volume. So if we do get lower, and we're sitting up in a daily area of supply. So while we did come up pretty nicely early in the week last week, and I still am not, I'm not changing my bullish bias overall from the big picture, right? Looking at our weekly chart, there's certainly no reason to change that. We only were down for a couple of weeks, and this is a pretty nice reversal candlestick. I am still being a little, I'm still being a little cautious, and I'm not ready to jump in at both feet yet with jumping in on every long opportunity that I see, right? And so in my mind, if we get lower than Friday's open, I would be a little bit concerned and could see this turning into a reversal candlestick pattern. Now, it's not there yet, and certainly it's very early in the trading session, but we're coming off of this high right through here. So we do have a decent area of demand down here, which was the origin of this very strong move up from Friday. If we continue to trade lower, that would be a decent spot to look for a potential stalling area. If I move to a slightly smaller time frame, go to say the 15-minute chart, we've actually created a nice little area of supply here just in the last few moments. So keep an eye out for this little area of supply for an intraday shorting opportunity sometime before the market opens. So that's kind of what I would look at. I'm still, like I said, cautiously optimistic on being a bull on the bigger picture time frame, but I do want to be aware of the lowering volume on the daily chart. When I take a look at the NASDAQ on the hourly chart, we can see very strong move up for last week as we did, we bottomed and then came a big move higher. We do still have a pretty nice breakdown potential below 15,177 if we get basing in front of that level. If I look at this on a 15-minute time period, similarly to what we just did in the S&P, you will see a very similar looking level right through here, which I think stands for a potential intraday reversal opportunity. From a long standpoint, where do I get long, right? Where do I get long on a retest? I don't have as clean of a demand in the NASDAQ as I do in the S&P down below us. And then on a 4-hour chart, my NASDAQ, is looking pretty strong overall, but once again, no super strong areas of demand to jump in on. So look for candle to candlestick opportunities and reversal patterns. When I look at crude oil, so crude oil on a daily chart, if I look at the daily chart, we can see that crude oil is bumping its head against the high from earlier this summer. Back in July, we had a little bit of a high, and so we're bumping our heads right off that area. If we do get a bit of a pullback, then I would look to this area right in here. Now, for those of you that traded the gap and go, the Sunday night gap and go was in play because we did gap up in the direction of the predominant trend, and we did gap outside of the prior day's range. And so certainly Sunday night gap and go was a play that I'm not sure if many of you were able to jump on board, but that was the setup that we were looking at, that you'd be looking at from yesterday. And that's what has happened kind of in the overnights. But on a retest back to the gap fill, look down to that 74 region. Last, but certainly not least, would be to take a look at gold, and looking here at our gold area that we see. We have a 4-hour chart that is definitely in a downtrend. A little bit of a rally up in the last few days, which has given it a bit of hope with some lower wicks, and those lower wicks typically indicate buying pressure. So we do start to see some buying pressure continuing to step in on the 4-hour time period. Looking up at potential reversal areas above us to kind of continue that downward trend, I think that your best one is this little noisy cricket wick over wick level right here. If I zoom in on that, that should be one that we can see fairly easily. And then none of the other levels up here or anything that's really striking me as amazing on that time frame. And so I think that that if we do get a rally back up into there, you could see a bit of a reversal. But other than that, I don't have a lot of great levels. So those are our big four as far as our big four markets go. Let's take a look at a stock of the day. And for our stock of the day today, I'm going to talk about LMT. LMT, Lockheed Martin Corporation. And looking at Lockheed, looking at this on the daily chart, we can see that we're in a very strong downward trend, have been since the high of right around 400. We've come all the way down to about 350, and now we had some moves up last week, but our moves up were on fairly lower volume, and we gapped up. Now this sets up for an island reversal. An island reversal would be a gap up followed by a gap down. So if we gap down this morning and we open lower than we closed, and there's a discernible gap, then I think that you have a gap and go short opportunity set up. If we do not gap down, then I would look for a reversal back up into this region right here where we have this little drop base, a very nice drop. And so that's right around 356.20 by 359.07. And all we're doing is trading with the predominant trend direction. So if we get stopped out, it's a fairly low risk scenario on a stop out position. Now, when I look at my implied volatility on here is slightly at the top of the lower 20%. And so when we're in that lower 20% range, we want to be looking to buy calls or buy puts. In this case, I think it makes sense to do a bear put spread since we are in that lower portion in that lower range. But very close to the top there. I think the bear put spread is probably going to be the way to go in this scenario, or just the long put, one of the two, bear put spread or the long put. But if you have any questions on that, go to tradersarmy.com, learn a bit more today. Until tomorrow, everybody, I hope you guys have a great day. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.